Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick. Some days are light on news, and today is not one of those days. Let's see. We have got earnings from IBM, Netflix, just to name, but there are a bunch of others, just to name a few. We have an end to this Qualcomm Apple saga. Finally, we can talk about it today and then never talk about it ever again. We've got the Sprint T-Mobile deal supposedly in jeopardy, and our guest today will be Sean Udall. He will join the show at 8:35. He's the CIO of Quantum Trading Strategies, and he's going to break down all the movers in the chip stocks. We also had Intel exiting the 5G modem market, and we'll talk about that as well. So a lot to get to on our show, Joel. What is happening here overnight?
Oh, S&P futures are in the green by 6 3/4 handles. We found support just below that closing price at 1150 at 0875, traded one tick off the high of the pre-market session. High of the move, 21 1/4. That's all you need to know. That was the high from Tuesday. We'll see if we can get through that. Really, no major resistance until you get into the 2930 handle. On the downside here, I guess I have to use like mid-range on the session here, 29, let's call it 29.13.5, minor support. Good support, though, at the close of 29.1150. Moving on, crude knocking on the door here, up 40 cents, high 64.61. We got a series of 5 highs from last week, right at that 64.70 area. So crude on the verge of breaking into the 65 handle. Gold trying to rebound. Real bad day yesterday, up only $1.10. Not a good sign for gold bugs. 1278.30 is your last print. Silver up 3 pennies at 14.94.5. Triple D, your head on a swivel. How you doing this morning?
Doing okay. Messed up a lot of good trades. It was one of those nights where the scalper blood in me just took over and left a lot of money on the table. Made some money, not enough for how I was positioned. So do you want me to break it down? What do you want me to do?
Well, I guess, we got Sean coming on at 8:35 and he's going to talk Intel, but I think people can learn from other people's mistakes.
I love
here.
it when people learn from my mistakes. So let's go in here and start talking some mistakes. So, okay, Spencer, break down first the news on Qualcomm, because I'm going to go into a whole bunch of trading on it. I was in and out of this thing, I feel like a dozen times last night. Break it down, Qualcomm. Give us the headlines.
Right. So the news initially broke a little bit before 3 o'clock yesterday. This is a CNBC report that Apple and Qualcomm were going to settle their long-held royalty dispute right before the trial really started. And then a few minutes later, they did come out with a statement that Qualcomm and Apple are going to drop all litigation against each other. And not only that, but they also have reached a 6-year licensing agreement with a 2-year option to extend. The deal is worth $2 of EPS for Qualcomm going forward for each of those 6 years, potentially 8 years. And that all happened about an hour before the close.
Yeah, so breaking it down, I obviously see Qualcomm take off. I've got this in my long-term portfolio. Thank you, Sean Udall, because he was the one that it was his pick of the year, and I bought it when it was his pick of the year. I'd already played Qualcomm once. I'd played it in my long-term portfolio from 55, and I actually got very close to the top. Rare that you sell the high, but you can remember what I was talking about. I sold it over $75. This was back in the summer. Actually, it would have been in September. You can see the big run of the hat up. Came all the way back down into the 55 area, and that's when, obviously, this year Sean Udall came on our show and said this is his pick. Qualcomm's his pick. So I'm like, well, this Sean Udall guy's been pretty hot, so I'm going to get back into my Qualcomm. I rebought at 55 in the long-term portfolio. Had it in there for a while. I actually took some heat on it. It went down in January, to under $50 and wasn't looking as good. But I've been holding. And all of a sudden, you get the Apple settlement, which was out of the blue, and the stock takes off 21%. So, I'm looking at this thinking, well, I've already played it through here once. I didn't have all the details. We didn't have all the details right when the settlement was announced. It wasn't all out there yet. So I jumped the gun and sold at 69.5. That was the long-term stuff. Then I started getting details and reading about it. And I was like, oh, this is big. I'm like, so I'm immediately regretting the sale. So I actually buy the close. I buy the closing price of 70.45. So then, I'm back to being long again, only losing a dollar of the scalp. So, but then Netflix comes out and they get hit hard, and then IBM gets hit hard, and then the S&Ps and Qs both start rolling over, and then some Qualcomm offers start forming. I'm like, I don't know. So I sell it. I immediately regret the sale, and I rebuy it again. So I'm long again. It goes up a bit because then I'm thinking, okay, we're going to get some upgrades probably. And then I see the $2 EPS thing, and I'm like, holy cow, this could really start running. Anyways, I was in and out of it 3 or 4 times. I scalp a little bit here, scalp a little bit there. But what should have happened was I shouldn't have been looking at my computer. Once I saw the $2 earnings per share, obviously being added, which I don't really think, I don't know if that came out before 4 o'clock or not, but I didn't see it until after 4. I should have just bought it and not looked at it again. So a lot of times when it's sitting in front of your screen, it's trading like crazy. The worst thing is just sit there and watch it and trade back and forth with it and in and out. And you probably best thing, you just sit there, buy it, don't look at it, come in here this morning, and now maybe you get out. But anyways, incredible movement. I obviously made some money with it, but I feel like I left some pretty good money on the table.
The $2 was out at around 327. So it
was out before. I had not seen that though. So, I mean, I'm preparing for a close. There's a lot going on. I did not see it till after 4 o'clock. And when I saw the $2 earnings, my jaw kind of hit the floor. And I was like, man, that's huge. How often is it that, you're going to get a new contract that's going to add $2 to your bottom line for 6 years? So I'm not surprised it's back up. I mean, everybody's trying to digest the stuff very, very quickly on the fly. You get people like me see a bank, 21%, 22%, ring the register. And then you get into the details and it's like, oh, I rang the register way too soon. So anyways, in and out of it, I did make some money on it, but I feel like I left a lot on the table. So I'm disappointed that I was making an uninformed trading decision because I was selling it without knowing all the details. And once you read the details, I rebought and I still somehow messed it all up. So anyways, that's my sad story. I mean, it's a good thing when you can make money on, a trade that you're disappointed in, but it kind of feels like a loser because I was trading on the details and obviously it's up another $7, from where I originally made my first sale. I know I did rebuy some and scalp some, but not enough.
Oh boy. Dennis, I mean, what can you do? I mean, you're not the only one that sold. What about all the people that sold at lower levels too?
Oh, I mean, this is one thing against having people will say, well, throw your order out there. And if something happens, you get done. And I'm sure there's people, obviously we said a lot of sales. Look at the trading action. Their sales going off at 59, 60, 61, 62. Those people are all getting picked off because they are definitely uninformed. At least I'm a half an hour after the news and, it has had some digestion and it had, started to consolidate. I thought 70, you know what I'm thinking is the big whole number 70. But then when you start reading the details, you think, wow, $2 earnings power, this could go a lot higher. And I was saying to a trader friend of mine when it was like $72, like this could see 80 on this. And I say that, yet I still don't hold on to some shares, at least hold some shares. But, the moral of the story is what Spinner is saying. Sometimes it's best to do nothing. Sometimes it's just best to, when you got something going, like think about how I preach on the show about upgrades coming the next day after a big move. Well, that's what started going through my head too after 4 o'clock. I was like, I didn't even contemplate how many upgrades are probably going to come here today. And we did get 3. So that's going to help it too. So there was just no reason to really sell at the close with the stock that strong going into the close and on that good of fundamental data happening for it that they're going to add $2 to the bottom line. So I jumped the gun. I sold too soon. And, and obviously, you're going to make mistakes. I learned from this mistake. Don't make uninformed trading decisions. You got to jump into the fundamentals and see that. If I would have saw that $2 earnings per share out of the bottom line, I wouldn't have sold it. I did not see that. I didn't do enough research to go and grab that headline. I mean, there's a million headlines happening. Plus, it's bad timing for me. I'm at 345. I'm preparing for a market close and trading 50 other stocks. So I just didn't have the time to sit there and really read through the whole Qualcomm details. Maybe I need a secretary.
We'll get Sean Udall in here at 8:35, and I wonder. It'll be interesting to find out, where his analysis was on this, what the pop. I know he has targets. We'll see what he's done in his portfolio or not done. $76.50 was your high in September of last year. Today in the pre-market trading, you've got to 77.75. Now, I've noticed that it got to that area, 77.85. I've noticed since 7:15 this morning, 4 of the last 5 brackets, the sellers have been in the upper 77 handle. That is only a target. That is nothing else but a target. The longer it takes to get to that area, maybe you'll get some selling on weakness. But right now, just under 78 is being targeted as resistance. Where to buy this thing on a pullback? Well, you'll have to bring in someone a hell of a lot smarter than me. I do see some pre-market support at $74, but if you're buying it at 74, you better have a quick trigger to get out on the exit. But big volume trading, we'll get Sean at 8:35. But let's talk about Netflix here. And
well, before we move to that,
sure.
Joel, let's stay in the same realm here because we got news on Intel
You're right.
as well.
Good call.
So, and obviously this was news for Apple too, but Intel somehow obviously was all involved in this as well, and they are not going to. Well, give us the news, Spencer. Give us the headline before I butcher it from my memory.
Yeah, no, it's okay. The Intel came out yesterday that they are not going to launch 5G modem products. They're going to exit the 5G modem space. Remember, they got a new CEO in January, Robert Swan. And this is kind of the first major thing that has happened since then. But they're dropping out of the 5G smartphone market, but they're going to continue to invest in 5G infrastructure. And regarding other areas of the business, like Internet of Things, they're going to provide an update when they report earnings on April 25th. But for now, we know that they are exiting out of the 5G modem market, which we were talking about this, earlier on the news desk. It seems like it would be good news for them because that was a low margin business.
It was dilutive to their earnings.
Okay.
So, and that's why you look at it now and you see why is Intel trading up. This is actually going to help their earnings because that 5G stuff was, in the smartphones was dilutive. So that's why you're seeing the stock trade up significantly. Intel, I got to go look at my investment portfolio. I think position in my long-term investment portfolio. I still have this. I'm trying not to sell any, but I'm fairly large in it. It's getting larger, obviously, here overnight because it's up almost 5%. I got that psychological $60 level kicking around. Mr. Elconin in the chat, what do? I got to learn from the Qualcomm to a certain extent. Sold the Qualcomm way too soon, but this isn't adding $2 to earnings either. Usually when you get a big move like this, I usually lighten up, and I'm definitely going to hold some. But thought crosses my mind. Oh, maybe I should sell half.
Yeah.
But 60, I don't know. Maybe you let this go for a while. Maybe there's no reason to really come in and sell. But it doesn't feel like the same thing as like a Qualcomm news that you're reading. It's adding $2 to earnings. It's gonna maybe help a little bit, but I don't know. It's a big move for Intel.
Why don't you pick a place on the downside where you'd want to sell it? Give yourself like a little room, like it's trading at 59.34. I mean, normally I would say, Intel up 264. How much stock does it take to move that stock?
That's what's in our head.
Yeah.
Scalper blood killing me in my long-term portfolio. Got to stop trading that long-term portfolio.
You're trading at the highs of the pre-market session. That's 59.47. Maybe throw a stop in at 57 or something. Would you be upset if you, instead of selling at 59.5, if you sold half your position at 57?
One thing though is in this market, it seems to stop you out of everything. So it's very hard. Now, I know, and this is something a good discussion here. You put protective stops out. It seems like there's always a whipsaw action. And it always seems like, when you're stopping yourself out, that'll come down, get you, and then a couple days, and then take off from there. It's hard because I like to sell rips. I don't like to sell dips. And when you're putting stops in there, you are naturally selling a dip. So, from a trading perspective, I'd probably, if I had a swing trade on, I'd probably ring the register for sure. This is in my long-term portfolio. I've had some shares in my long-term portfolio for a long time. I doubled down and bought more on the dip in earnings. So what happened was, I was long it. It got up to $50 back before the earnings in January, and it had the dip down to 46. Everything seemed to just be a buy on the dip on earnings. And so I doubled down and it would have been a loser actually then because it had went down. So I doubled down, and obviously it was a good call. And 4 or 5 days later, it was already back up to 50, and now we look at it and it's at 59. So it was definitely a good call. But it's been the play to buy the dips when the stock trending up. When you put a stop out there, it's like you're selling the dips. It's like you're going against, really it's difficult making money selling dips all the stops.
Can I make a suggestion that you're not going to want to do?
Yeah.
Do you think the calls are just going to be just juicy right here? Like,
you could do that. You could write some upside calls.
Like the 60 calls at
probably get a couple bucks if you went out a little ways.
Yeah. So then let's say you sell 60 call for 250 right now. Yeah. Then you're out at 250, and then you're protected down to 56 3/4 on that part of the position.
Yeah, that's not a bad call too. I used to sell lots of long-term calls against my portfolio. The reason I stopped, and I think
Walmart.
It was a long time.
Walmart.
No. The reason I stopped was I bought a lot of stocks during the financial crisis.
That's right.
And I wrote upside calls, and I wrote the upside. I were buying eBay at like $11, and I wrote the 15s, and I got $1 for that. So I'm in eBay at $10, and this was before it did the whole PayPal spinoff. So we're talking equivalent of like $2 or $5 now or whatever. You have to add the two prices together because they gave me that many shares. So eBay, PayPal, because they gave me PayPal, it's $140 stock now. So I bought it $10 during the financial crisis, or $11, wrote the upside call at 15 for $1, which sounded pretty good that I'm covered, And anyways, and I wrote it out like 6 months. Well, we know what happened, in 2000, at the end of 2009, 2010. Market just kept ripping. And I got called away on eBay, and I called away on a dozen stocks. And eBay at that time got to like $25, and I got called away 15. I'm like, man, that was, to pick up $1, and yeah, it was good. But to pick up that $1, I got called away, and I missed out on all of this potential gain. And I was like, I need to stop selling covered calls in my portfolio. That's the downside of selling covered calls. It works awesome in a sideways market, and it helps a little bit in a down market. But in a market that just rips and goes up 100% in 3 years, you get called away on a lot of stuff, and you leave a lot of money on the table. So it's not just a slam dunk, to always just be writing calls. Works very good if the stock's going to go sideways or nowhere. Like a stock like Tesla in the last 3 or 4 years has worked awesome if you've been writing calls, because it's gone nowhere. Really, if you look at Tesla over the last 5-6 years, we're 250 back in 2014. We're 273 today. You know how much premium you could have taken out of Tesla because of the volatility is there? It works really well. So sometimes it works, sometimes it doesn't. But if you get a market that really starts to go, you get called away on a lot of stocks and you leave a lot of money on the table. So that's the downside with writing covered calls.
Okay. Well, I don't have my options platform up, but do you think it's going to 62.50 by next week?
I just watched Qualcomm, and this is a completely different story.
Different. This is different.
It is. It's difficult, to just predict where these things go. But I've been turned off of doing covered calls just because I left so much money on the table in 2009 and 2010. I think about if I would have had all those stocks I got called away on way back then, and still had some of those in the long-term portfolio, like I still have a few of them, and the few that I have is like MasterCard. And my average cost based on MasterCard is $16. It's $240. You're writing covered calls all the time on stuff, never going to have a gain like that.
True.
Because eventually you're going to get a rip that's going to not come back, and you're going to get called away, and it's not going to come back for you to get a chance to get back in. So if I looked at my long-term portfolio, I'd probably go 5-6 stocks that I'm up 700-800% on. If I had covered calls on all those, they'd all be gone too. HRS was another one. About HRS during the financial crisis, at like $20 or $15 or something crazy. It's $166. So you're up 1,000% in that. Harris, that's obviously.
Oh, that's right. Yep.
But I just think about the other stocks that I bought back then. And, we're not in financial crisis, so maybe it's not the time. I don't think we're going up. We're not going up 300% from here probably. But, there is that, possibility that maybe we are just starting on a huge long-term, bullish trend here right now. Maybe some stocks are going to continue to go. So it's always tricky. You think, okay, how can I lose by writing covered calls? I would sell the stock anyways. But the one downside is I really believe that you don't get those huge 1,000% gainers over the course of 7 or 8 years if you're always writing calls against it. So, But then I just trade out of it. I got to stop trading the long-term portfolio too. Buy and hold, Warren Buffett. Got to start doing that again.
All right, we gotta get on to Netflix here. We gotta cover Netflix. What crazy price action in that? Spencer, you want to give the report?
Yes, I've been waiting for it. So Netflix was out yesterday after the bell. Q1, the earnings were good. The guidance was not. Is the short story here? Q1 EPS 76 cents versus a 57-cent estimate. Sales of 4.52 versus 4.5 billion dollars. Their subscriber numbers for the quarter. Let me pull those up here. Domestic paid subscriber additions 1.74 million versus a 1.61 million estimate. International subscribers, new ones 7.86 versus 7.31. So their subscriber growth was strong, their earnings are strong, the revenue was strong, but the guidance, like I mentioned, was a little bit light. Their Q2 EPS guidance, 55 cents versus a 99-cent estimate. Sales guidance was pretty much in line at $4.9 billion. And they guided that their global streaming paid memberships would be $153 million at the end of this current quarter, so for the next report. So all that comes out to good quarter, light guidance. They hit it, and now we're back.
Buy the dip. It's got to be the best. The last decade, buy the dip just continues to work. I mean, it seems like a 9 out of 10 stocks. I mean, you obviously can pick the wrong stocks, but on these Momo ones, it gets hit last night. Where was the low, Spinner? What was the low? 326?
Yeah.
That where it got down to?
Yeah, it did. It did.
They hit this thing on the news down to $326. It wasn't down there for more than a minute. I saw it trading in the 330s for a bit, and the 340s, you could have picked up 340s easily. It just kept rallying up and rallying. You got the after hours chart, just kept rallying up, rallying up, rallying up. And now you look at it, and that's all gone. And now we're up $8. So somebody sells us at 326 last night. It's up 40 points from there already.
Guess how much volume it traded in that bracket?
Oh, it's probably huge.
Yeah, almost 2 million shares. Do you think humans were doing that? Or do you think
I think the algos hit it.
Yeah.
I think the news algos, it's a really tough gig. Like, okay, let's go on another tangent here. They seem to like the tangent. Imagine being a news algo and trying to interpret earnings reports from a headline. I mean, that's a difficult thing to, first of all, write. Second thing, like, they do it wrong a lot of times. Like, I don't know who runs all these news algos. Like, I do it as a human. I try to do news interpretation. And I did that wrong on Qualcomm last night, just because I sold way the hell too early. It's crazy when you think, like, all the variables that go into interpreting an earnings report. And these news algos are doing it. Headline miss. They're doing, some of these are simple formulas probably. It's just going to be EPS miss or EPS light or revenue miss or revenue light sell. And that's what they do. And then you start looking, and there's other details in there, and it starts going. And there's sentiment, the algos aren't putting sentiment in there. Maybe some of them are. Maybe the smart ones were coming in and buying it. But on that initial headline, I tell you, this news algos will lost some money because they hit that down fast. I mean, how fast was it down to 326? Like,
Texas Linda says 5 seconds. So
so yes, high frequency traders, and yes, some of these are going to be, I don't think you've got, your main guns here out there trading the headlines. They're more market making, some of the bigger high frequency trading firms, but everybody, is doing automated trading now. So people can write news algos. You got, Joe Blow in his basement writing news algos, I'm sure doing it to a certain extent. It's not that hard to write, those headline miss, headline, hit. But, we could write something up that in Excel VBA pretty fairly quickly. But it's hard. Like, I don't run stuff like that because I don't know. There's so many variables that go in. I see how much money they lose sometimes. They lost a lot of money last night.
Yeah, it's you're
but they don't have to.
Back. Go ahead.
No, they don't have to lose money. Like, if they wanted to, they could control their spend. But why would they when they're like the Giants and all they're doing is increasing their lead over everybody? I did see one tweet that I wanted to bring up because I thought it was particularly informative. This is from Matthew Ball. He's a media guy that I follow on Twitter. This is from him. As a reminder, Netflix's catalog has shrunk 66% since 2014. Its pricing has grown 40%, and yet subscribers are up 67% and engagement is stable. So price increases, schmice increases. It doesn't matter. It doesn't matter. They grow like clockwork.
I mean, people absorb these price increases because it's still dirt cheap. So you think like, oh, $10 a month, $12. Think about what people pay for cable. I mean, I have a cable. It's like $50 a month. I watch like CNBC on it.
You pay for one
it's
channel.
crazy. You think you pay $50 a month to watch CNBC, and the only reason I pay that is because the cable, because I'm trading, and the cable's a few seconds faster than I can get it online. But I mean, remember we were testing it. We were going.
Yeah, I know. You made me test it.
I was asking everybody.
You made me test it like 5 times. I remember that.
6 seconds behind. Anybody beats 6 seconds? It's 6 seconds now. I've tried them all. I go and try which one's the fastest. So I think there's a delay probably for the cuss words and stuff, right? So there's always going to be a little bit of delay. If anybody's got CNBC 0 seconds behind, they're beating me by 6. But mine's 6 seconds behind. But I pay $55 a month to watch one channel. It never leaves that channel, my cable. It's just on that one.
And you know what?
And it never leaves it.
You know what the ridiculous thing is too, is that you're watching stuff that you talked about the morning or the night before on CNBC.
Yeah, but it's when they come on and they say something. You get the good guests like Gene Munster on there. They can move stuff.
I know.
So you got to be aware of who's saying what on CNBC, because they do break some news. I mean, David Faber, excellent. He breaks news, breaking news. You got to have it on just for when he, like, I know CNBC always says the breaking news, and 90% of the time it's not breaking. David Faber comes on, he's connected, he breaks news. So you got to have it as a trader. You got to have it for that information. But I mean, you look at, most people aren't going to be trading like I am. And most people don't need cable. And they watch, and what do my kids watch? Like I look at my kids watch, we watch Netflix. They got Peppa Pig on and all their shows. And I've got the Netflix on more than anything. And so if I wasn't a trader, I'd cut the cable too. So you think about that. And I used to pay $50. Okay, well, if you're paying Netflix $10 or $12 or $15, it's still dirt cheap relative to cable. They could go to $20 or $25, and people aren't going to cut that off because it's still beating the hell out of paying a $70 or $80 or $100 cable bill.
Targets on the upside for Netflix. You have a pair of highs, and I'll just give you some ranges here: 372.05 and 373.41. Those are your April 3rd and 4th highs. We'll probably be there in a little bit. And then things open up to 376.43 and 379. So those are just, some soft targets just based on the daily highs. The all-time high here is 423.21, so we got a ways. But, quiet consolidation moving up towards those daily highs. Also another good trick, just keep an eye on what the high is, at 9:29 and 29 seconds. Now you have Qualcomm in the 78 handle, up 770 at 78.08. So
going to 80, it looks like. I said it last night was 72 to my buddy. I think this could go to 80. Why did I not just hold on to shares? Stop trading.
I'm sorry I mentioned that.
I'm so depressed right now. Anyways, going back, Gene Munster said something interesting on Netflix last night, though, and in comparison to Disney. And he says, he's not a big fan of Netflix just because of valuation issue. He just can't wrap his head around it. And I'm kind of, parsing words here with Gene because I'm trying to go from my memory. But the point that I wanted to make was a good point that he made is that, Disney's going to have their product for $6-7 a month. Netflix is going to be still $15 a month or whatever. People probably aren't going to dump their Netflix to go to Disney. They're probably just going to subscribe to the Disney too.
I said that yesterday.
Did you say that?
Yes.
I got to listen to Spencer Israel. Gene Munster must have been listening to PreMarket Prep.
That's what everyone
said it on CNBC.
No. I'm saying that's been the consensus among analysts that I've read. Is they're not.
How much is the Disney thing?
Gene. Maybe I'm just remembering what you said yesterday, Spencer. I'm pretty sure it was Gene that said it last night.
He probably did say it.
We know Gene's a fan of the show. Gene, are you listening right now?
What the hell's the difference?
He probably did say
Spencer.
Joel, to answer your question, Disney is $7 a month, and they're not going to be taking the pie. They're going to be making the pie bigger for everybody. They're just going to add another service to their, to what they pay for. So
people who are getting hit further on this is the cable providers. That's why you look at AT&T with their direct TV, and you look at, I know Comcast has a lot of other things. They have Comcast, content too, but I just think, there's people cutting the cords. It can't be good for them long term.
And AT&T.
That's why I look at that AT&T dividend at 6.35%, and I think, so much competition. And obviously, DirecTV is a smaller piece of their revenue pie. You can look at your cell phone and say, oh, that's safe. But there's competition coming for that too. I mean, we're not going to be paying $200 a month for our cell phones or $100 a month or whatever we do in 10 years. We're probably, what do you think we're going to be paying for our cell phones in 10 years? There's going to be so much competition, cheaper ways to go about
There's
it.
not going to be cell phones in 10 years, Dennis. What are you
What
talking
is there going to be? Oh, this is a good conversation. I like where this is going. What's it going to be, Joel? Tell me. I'm interested.
I don't know,
What
a
are we gonna do to
watch,
communicate?
a necklace or something. You're not going to have to carry around an extra device with you. Maybe there'll just be a little chip in your head,
That's what Musk was saying.
Really?
Yeah, Musk said that on that when he was on the Joe Rogan show. Did anybody watch that interview? Because everybody made fun of him.
Did anybody watch that interview?
He said that. He said everybody's going to get a little chip in their head so they can process information faster.
Yeah,
you know what? He's right.
You wouldn't have sold your Qualcomm if you had a little chip in your head. Unless
I would have known the $2 EPS. What did he say? It was like there's so much information out there. Musk, I know, love him or hate him, but wow, the guy is just thinking all the time. He's like, there's so much information out there. You're like sucking all this information through a straw, trying to, and it's so slow and so inefficient. And that's when he got to the whole thing. You need like a chip in your head to just process it all. And then you can just take in so much more information. It's true. Right. We're going to eventually be the machines.
Spencer, you're not doing your job. Come on.
I don't even know. I was trying to chime in.
Don't quit during the show.
I was trying to chime in about AT&T.
Spencer Israel, would you put a chip in your head to process information faster so you can make better decisions on the pre-market prep show?
Of course I would. Yes. I would put a chip in my head in 2 seconds.
I think I would for trading. I'll put a little chip in my head. Is it going to hurt? I mean, I chip my cat. My cat's got a chip in its back because, and if it gets lost, you can just, they just scan the cat. It's like, oh, this is Dennis Dick's cat. So
didn't your cat get lost and go from all the way to Windsor?
He was gone for 3 days and then he showed up. We were at a cottage and he's only been there for a few days. He doesn't even know where the hell he is. And he took off.
All right. Imbalances.
Yeah, imbalances, Dennis. Anything good this morning? Anything big?
They want to take me off this tangent here. Now the imbalances. IBM 47,000 to sell. We haven't even talked the IBM earnings yet, so maybe we'll talk that.
Let's do it
in a second. We got 2 minutes, so okay, go to IBM. Quick like a bunny.
All right,
Easter's coming.
IBM Q1 adjusted EPS $2.25 versus $2.22. Sales 18.2 versus $18.5 billion. So a slight EPS beat and a slight sales miss for IBM in the first quarter. The guidance was in line.
Stock down $4. It tried to rally a bit and then it's kept leaking here. So I don't know. It's not selling off. It's not rallying. It's kind of just been hanging on this 140, 141 area here for the better part of the entire after-hour session, entire pre-market. So what are your thoughts here? I have no thoughts on IBM.
Just give you the pre-market low. Pre-market low comes in at 139.15. You got a little bump off that. So buyers have stepped up. So as long as that holds as the pre-market low, I think you could test this 141.50. That was a high off the rebound. What am I seeing here in the dailies? I see I see a couple lows there between 138.40 and 139.10. So I don't think I'd get real worried on the downside until we took out 138.40. That was your March 27th low. Stocks had a nice run, quiet ranges, taking a little bit of a breather here. And it seems like it usually goes down off reports, but not bad. It's definitely on the rebound off the pre-market low.
Let's go grab Sean.
Yeah, 8:34. We're going to grab today's guest, Sean Udall.
We're bringing him in live.
We are going
bring
to
him in live.
Bring him in hot. He's hot right now.
He's the CIO.
He is going to have a good morning Benzinga like we've never heard before.
Let's see. Sean Udall.
Good morning, Benzinga.
I love it.
Sean, let's talk about Snap. I know you're trading a lot of Snap lately, NSAP. It's your biggest position in your portfolio.
Is this April Fool's or something? Did I miss the last 17 days?
Sean, okay, we got to go to Qualcomm here. First of all, you've made a lot of great calls on this show, and you made a lot of fantastic calls on this show, and you made some that aren't so good too. But this is the Whopper. This is the granddaddy of them all. It's the Rose Bowl of your calls. When that information came out, were you cognizant or were you aware that it was going to add $2 to earnings over 6 years?
Yeah, in fact, well, yeah. I mean, and I had, I'm actually raising my price target this morning. I published it on, my site, the Udall report. I'm basically moving. My old target was low 100s, 109 to 110ish. The stock looks like it's going to go there relatively quickly, but here, but
today
my
it
old,
looks like it showed up.
Yeah, my old EPS number was basically 750 post settlement, right? So now that's not this year's number. It's probably more like next year's number. But I was basically saying, look, I think this thing can trade, unless they get some crazy egregious deal. I think EPS is going to trend somewhere between $7 and $8. So my old number just roughing it was 750. If you add $2 to where they are now, it gets you pretty close there on next year's numbers. It's still maybe a little shy. But yeah, no, I basically, I honestly, I think Qualcomm saying that $2 in incremental earnings, my guess is that's a sandbag number. So that, they're now basically going to beat earnings for something like, probably 6 to 8 quarters in a row.
It's huge. It's huge for the stock. I mean, is it too much too fast question here, or is this still, it's going to keep running? I mean, I thought it was too much too fast maybe yesterday, and it's up another 10% today.
Yeah. I mean, it could be because it's 78 right now. I mean, I posted some stuff yesterday right after seeing the news, and I think this was before they uttered the $2 deal. I said, look, I think this thing, in fact, I said, look, I'm not selling anything. I'm not selling stock. I'm not selling calls because I think this could make a move to $80 quick. And then I think that $2 EPS came out. I was literally lining up a trade. I was going to buy more between like 66 and 68. I was doing something at the news. A couple of people texted me. So I wasn't actually in front of my computer the second the news hit. And I'm not a news flow trader anyway. So I don't know if I would have said, look, the minute I saw it, would I bought it at 64? I might have. But the whole point is I was really trying to get the numbers. I wanted to know what the settlement agreement was because all I had seen was the headline. So I knew it was really good, but I didn't know how good it was going to be. So the bottom line is, I could have actually added to it. I was thinking of adding to it. And the $2 EPS came out. All of a sudden, the stock kept surged to 70. And I'm like, well, if they fade it, I'll get a better entry on fade. Well, it's up another $8 today. So I'm very happy. I have what I have. It's a decent position. I think I told you guys I had June 60 calls. I got a few leaps too. But the June 60s are like massive. I mean, I don't even know what bag.
What'd you pay for those? Do you remember?
The highest I paid was I bought them a few different times because what I was doing, as I was making trading gains, I was kind of nibbling on a few more over time. And I did exit some. I think I bought some as low as like 65, 70 cents.
Wow.
I think I sold some of those on a triple just to basically pay for a bunch of the other ones. I think the highest I paid was 240. I'd have to go back and look. But let's say my cost is probably the midpoint of that, probably $1.50, $1.70 or something.
Yeah.
So that's going to be a nice hit. The better hit obviously is common. And I think here's the thing to think about, could this usher in more rational trading? I mean, I'm looking at these price targets right now. The argument's fundamental analysis is dead. Stifle went from 57 to 100. I don't even know what some of these guys price. JP Morgan went from something to 88. I mean, a 57 target on Qualcomm. Come on, that was a ridiculous target before. Because even if you modeled in a 50% reduction in royalties, it would still be cheap. It would still be fundamentally cheap at 57. So I don't know. Maybe this ushers in some more rational trading. Maybe this brings, Dennis, you and I talk, sometimes big things in the market start from relatively small events. Maybe this is kind of ushers in a big move for value stocks. By the way, I have one you guys want to talk about.
Sure. For sure. Let's.
But we'll just kind of have to see. But here's the one thing. Let's end it. I'll end it with Qualcomm with this. It is now going to trump every other semiconductor stock for a few quarters. So, like, looking at the moves of Avago, ridiculous. Moves of Xilinx, ridiculous. Moves of Intel, ridiculous. So it's like, look, if you want to keep buying those stocks at highs on momentum, Qualcomm's going to outperform those names, I think, massively for a time. And I do think price targets are very conservative. I think they will end up edging to where my old target was. So most of the analysts will have to come to like 100 to 110, again, where I was a year ago. And I think they're going to have to go over time move to my new target, which is 133.
Is there anything else? Good question coming out of the chat here. I mean, it's good for Qualcomm. Intel's moving on its own merit today. Is there anybody else, maybe lying low in the weeds here that might benefit from this? Or this was pretty specific. Qualcomm Apple battle been going on for a long time. Is there anything else you might be picking? You're thinking, hey, this is going to be good for them. And I guess anybody else that has a lawsuit going against Apple.
Yeah, I'll probably buy more MTSI on this, and here's why. So
what's the symbol again?
You could MTSI, MACOM.
Okay. Yeah.
So you could make a case that 5G deployments have been somewhat held up because of this. You could also make a case that 5G, let's call it the semiconductor manufacturing cycle in China has been plagued by this, right? There's still no China deal. There's still no US-China deal. But, again, Apple was basically trying to do an end around with Intel. They're trying to not pay Qualcomm. They were trying to get Intel to build the modem. By the way, did you guys see Intel exited the 5G modem business?
Yeah, we want to ask about that too.
Yeah, that's probably a huge reason why the stock gap went from like 71 to 75 last night, and probably part of the move this morning. So, but yeah, they were trying to do an end around, trying to have Intel make 5G modems. It didn't work, did it? So now they got to pay the piper. They got to honor current agreements. I think this is kind of just a good victory for U.S. business too, to be honest. But yeah, MTSI could be interesting because they had a pretty good quarter. But they basically talked about that it's something like 20% of their business is on hold right now. Because, you don't have a China-US trade deal, 5G deployments in China kind of being held up. Huawei and Qualcomm have been embroiled in an IP dispute for a long time. Huawei's paying Qualcomm $150 million a quarter now. That's a new agreement. That's a placeholder. So this could open the door for actually quite a bit of settlements for other people to get settled, this whole issue settled. And it could kind of open the door to get 5G manufacturing kind of get started. So we'll see. I don't think that's a big stretch to kind of see the food chain kind of get more active now that this agreement's out of the way.
Will this kickstart Micron or TSM, Chinese Semiconductor?
That's a good. It could be a benefactor for TSM because TSM might do the bulk of Qualcomm's foundry work. I'm not as close to that kind of stuff as I used to be. What was the other one? Not Micron. I don't know if this. I don't think this changes things for Micron. Micron's still on the same timetable they were. Unless this gets us to a faster 5G enabled iPhone, which I don't think we see a 5G enabled iPhone until next fall.
Do we need it? I've heard like multiple people saying like 5G, the 4Gs are fine. Like how's 5G going to change it? Like what is really are they going to be able to handle it?
Yeah, no, I think people misunderstand the sort of the benefits of 5G. So do we really need it? Because 4G is pretty damn fast already, especially in metro areas where you got, I guess you got even like kind of like pumped up 4G. Yeah. No, phones work plenty fast, right? They were, but hey, would I rather have my iPhone load a web page in 2 milliseconds versus 3 seconds? Hell yeah. I get, you add up that 3 seconds times, how many ever times a day, it turns into minutes, and maybe it turns into hours over time. So But here's there was some analyst on yesterday, and I literally almost spilled coffee down my shirt laughing because he was talking about that the literally like you saying like that 5G was going to be a bust, and he said 3G was a bust. 3G was not. 3G was massive. So I don't. First of all, I don't even know what he was smoking to say 3G was a bust. But I think people. So 5G. So the difference between, let's say, 3G and 5G. If you want to do real-time computational mapping AI, you can't do that with 3G or 4G. Okay. If you want to do real-time mapping computational AI in a driverless car, you're going to need 5G and beyond. I mean, what will happen is over time, 5G won't be fast enough. It'll be fast enough for the data loads people are anticipating now, but it won't be fast enough for the data loads of 2 or 3 or 4 years from now. So then we'll have 6G whenever that upgrade cycle is. Internet of Things, inventory management. So all the capabilities of 5G are, I think if people are focusing on the phone, they're not really thinking about it correctly. It's going to be a much more pervasive sort of technology rollout with many more, let's call them tertiary benefits of computational power. So it probably is more analogous. I don't know, when we went from when servers were still using 486 architecture and went to Pentium type architecture. You kind of got a multi-factor leap in computing power. The move to 5G is going to be similar to that.
All right, Sean, you mentioned a few minutes ago you have a value play. What is that play?
Well, you guys know that I'm not a huge fan of pot stocks in general, like the whole thesis of pot stocks. We've talked about some of the crazy values. I'm not sure. I think I was on a show one time when Tilray was 220 or 250 or something. I think Dennis and I were literally laughing about that. But if you look at the space, I sort of, there's a name, the symbol's PYX, that I don't want to call them the only legitimate pot play because that would basically say that the other companies aren't legit. I think the other there's definitely legit companies. The question is, are they worth paying for them?
Valuation.
The value, is the valuation legit? In other words, are you willing to pay an aggressively expensive software multiple for a pot stock? And these people literally have to grow a crop. They have to buy land, they have to fertilize land, they have to grow a crop. Crop takes time to mature. They have to harvest the crop, and then they got to sell the crop. With software, you can digitally manufacture an infinite number of copies of the software for basically pennies, right? It's whatever human capital and software capital you've already invested in that process. So the fact that pot stocks trade at expensive cloud software multiples is pretty nuts, right? In other words, the durability of the growth. I mean, what are we going to have? Is everybody's backyard going to have cannabis plants in it? I mean, so if you to value some of the pot stocks at a rational valuation, you almost have to say it. Look, okay, it's 30% of the arable land in the United States going to grow cannabis. I don't think so. So, but PYX is a former tobacco company that's invested very aggressively in the cannabis industry. I'm just going off a few analyst notes and comments that I've seen. So I don't know what their pot run rate is. But there was an analyst on the last call that was sort of talking 250 to 500 million run rate over time. We're talking about a stock that has a market cap of under 200 million, 161 million as of yesterday's close.
Speculative.
And well, it's a speculative name, but they got $1.8 billion in revenue on their old business. Now, some of that is pot. I don't know what the percentage of that is pot right now. But let's just give them a couple $100 million of pot revenue, and give that part of the business even a 50% discount to other cannabis stocks. Well, you got to give it 10x sales, and again, that's I mean, there's pot stocks at 126 times sales. So I'm being super reasonable about it. So just on the cannabis business alone, if you got 250 million times 10, that's 2.5 billion. I'm not saying this thing's going to be a 30 bagger, but it literally would need to be a 30 bagger to trade at the same valuation of, I don't know, like a Cannabis or something. So in other words, or a Tilray. So if you believe Tilray is the right price here, I would argue PYX is massively from the right price. So the question is, okay, how much is Tilray and how much is Cannabis and these other, how much downside those stocks might have and how much upside might PYX have? So again, I'm trying to kind of find a happy middle ground at what's a run rate that pot stocks can trade at long term. Nobody knows that yet. But I know it's not going to stay.
Are you in the PYX?
I am.
Here yet?
Yeah. In fact, I bought a little bit more yesterday. So let's say I don't know what it's going to trade at, but you're basically saying that the stock's whole 1.8 billion revenue stream has a negative value. If the pot business has a positive value, so you're either getting a huge call option on a pot, and by the way, from what I've heard, these guys are have done one of the best jobs in investing in cannabis space growth.
Yeah, but it's farming though. I mean, isn't farming not? I mean, it's farming.
Well, but I already said all that. I already said that the whole business. The whole business model for the belief in that what cannabis stocks are trading at right now was basically, kind of funny. But again, just saying that, look, these guys could have 250 million or more of cannabis-based revenues. I think that should be worth more than 161 million. But put it this way, I think either the only way I'm going to miss on this is if Tilray goes to $5 and Cannabis goes to 2. So my guess is it's going to take a long time for Tilray to go to 5 and Cannabis to go to 2.
All right. Before we let you run, Sean, I want to get your thoughts real quick. Still long FireEye?
I am.
Okay.
And I don't think FireEye is going to give me a luscious Qualcomm type deal. But yeah, my accuracy rate's incredibly high. Not all names work. It's not dead yet. But there's not a whole lot going on with the name. So I think I told you guys this. I haven't traded it for a long time. Yeah, I've traded other things, but I still have some. It's not hurting me. If I ever decide I need the money for something else, I'll put it into something else. But I still think
isn't one of your top picks anymore, though, or anything like that.
No, I mean I haven't focused on FireEye for honestly probably 2-3 years.
Yeah.
All right. Sean Udall is the CIO of Quantum Trading Strategies. Sean, thanks for the time.
Hey, thank you guys. Have a good one. Later.
Thanks, Sean.
All right, 8:53 here, and we didn't even get to the Sprint and T-Mobile thing. So let's talk about that now. The report yesterday that this deal is reportedly in jeopardy. The government or the DOJ is not likely to approve it based on the current structure, though the CEO of T-Mobile then went and said this is not true, but the market seems to think it is. So let's look at Sprint and T-Mobile here.
Both stocks obviously got hit on this news. This came after hours. T-Mobile and Sprint had both been actually going up. We know T-Mobile's trading with Sprint. And significant hits after hours. T-Mobile down 3.5% here and now. Sprint actually got into the lower fives. It's bounced from there, trading up at 560. Maybe the CEO comments from T-Mobile helped a bit, but still significantly off those highs. I mean, if you believe this deal is going to get done, then it's probably a good buy down here right now. But, we've seen deals fall apart too and deals get killed. So I don't think it's, I hear nervousness about a deal going through. I think the move's probably justified.
Yeah, I mean, it's hard. The fundamentals here are, totally dictated by whether or not this deal goes through. So base your trading decision on that. T-Mobile is taking a hit after a nice run. Let's see what we got. We're trading down a couple bucks here. I mean, I hate to give technicals on this stuff because, one headline and it can totally change the complexion of what's happening. Let's see. They hit it really good. They hit it down to 69 even. Now you're back up at 71.50. I see a couple lows at the $69. In fact, right on the kisser. 3 lows, 4 lows, right at the $69 area. So a bucket, $2.50 off that. I think you get back to fill, you find buyers, and Sprint will be, moving off the TMUS here. Sprint trading down 41 cents.
You also saw Verizon and AT&T get hit a little bit last night as well when that news came out. They've bounced. Verizon got down low 58s. AT&T was trading around the point at 32. So they've both bounced here too. But just keep an eye because, I mean, this news is obviously specific to T-Mobile and Sprint, but it sometimes has some sympathy plays in the sector as well. So keep an eye on Verizon and AT&T today too.
All right, there's like a dozen other earnings that we could hit on and don't have time for all of those. Were there any you guys?
Morgan Stanley, we got to do.
Morgan.
Gotta do more. All right, we'll do Morgan. You gotta do Morgan. A Q1 EPS $1.39 versus $1.16. Sales 10.29 versus $10 billion estimate. So a EPS and sales beat for Morgan Stanley in the first quarter.
Volume's 413,000, probably enough to chew through the size. I see it, but I do see some size up at 48, so maybe not. 40,000 to 48, another 24,000, 47.95 in the buck. That liquidity obviously becomes active at 9:30 when New York opens for trading. So, I mean, that's the first test. Let's see if it can hold on. We saw Goldman trading up in the pre-market on their earnings report and then turned around and they killed it. So you just got to be cautious chasing any bank stock on good earnings because they often do crater. That being said, you probably have a few people that are thinking that already. So maybe it holds on because of that, because we already saw Goldman give her back and JP Morgan leaked it that second day, but it's come back too. So we've seen mixed reviews, really. JP Morgan has held on to its gains. Citi has held on to its gains and built on them yesterday. Although Citi, I would imagine if you're trading Citi off of this, get anywhere near 70. I got to look at the book at 70. It's got to be huge. 70, 250,000 shares at 70 on Citigroup. So little chance it opens over 70. Let's see if we can take it out in the regular session if you get some good news. But I would think initial resistance up there in front of that, probably in the 69.80s and 69.90s, as you got the short-term traders and the scalpers leaning on the 70.
Pre-market high, Morgan Stanley, 48.68, now settling back in under that size that Dennis talked about at the $48 area. So we see what happens. They could take out that size. 48.63 could be another target on the upside. Morgan Stanley hasn't traded in the 50 handle since September of last year. But let's see if they can absorb the size off the open and carry it through and make some money off those 48 sellers. Bank of America went up, went down, came all the way back. Now is in the middle. So hard to determine, how it's going to move off the other bank earnings. Citigroup, I did not take a look at today. But if there's good size at 70, you're not really getting a running start as you closed at 69.31. So I think that's some valid.
If Morgan
reasons.
builds and Morgan starts to rip, it could take it out. It's going to depend on Morgan's going to lead the way for Citi today. Can it build on it, or is Citigroup running to the sellers that did before at $70? I think I looked back. And just looking back to the weeklies here, I can remember some problems at 70 before too. But anyways, when you got significant size there, it takes some big bucks to get through there. 250,000 shares times $70. I can't do the math on that in my head. Joel is good at the era math, but it's a lot of money. Well, let's say it's a lot of money.
It's a lot of money.
Netflix,
just a quick update. Just hit 373. We were talking about the pair of highs between 372 and a half and 373 and change. So right now that hit it. Texas Linda got a nice little trade off that, 12.22 points. Where'd you exit Texas Linda? Let's see what your target was. We only got a minute left, Dennis, and I know we need to do like a 3-hour show, but this JMIA is hot.
I want to bring this
in
one
both
up.
chats. Let's finish with that stock.
This is like supposedly, from what I've been told, the Amazon of Africa. Is that right? Yeah. Oh my gosh, look at this thing.
I don't know what to tell you.
Again, whenever we talk about stuff, I have no idea how to trade this stuff. This is something I'll make zero trades on, because you know what? You could buy this at 50. It could be at 60. It could be at 70. It could be at 30. Go to the casino, throw it on red or black. I mean, if you're trading this stuff, it's just a shot in the dark. It's up 17%. It's had a 3-day incredible move. Everybody likes trading this stuff because they make money fast. I mean, You get rich fast on this, you get poor fast on this. So
Yeah.
you decide how fast you want to get rich. I've never made money getting rich and trading this stuff. It's not for me.
Trading at the highs of the pre-market session, and that's at 50, 60. Boom, right there is where you're traded. So that's really the only thing I can give you on that one. If you do have bought it over the last 3 days, it's never going to find the top, but throw things out at the half and whole numbers and see if you get lifted. If not, there's not buyers at those areas. You could hit some on the downward momentum, but that's if you want out. Don't know what your targets are on that one. I'm going to wrap things up. Great show today. I do have to say so myself.
We'll just pat ourselves on the back.
Full disclosure.
We'll
It's
pat
just
ourselves on the back.
and it's funny because, I'm not going to give you and Spencer that much credit, but myself.
I got the new haircut. I think that's
you got the new haircut, but
I
schedule guests and I cancel guests and I bring people on. And then, Sean, I tried to get him on yesterday, but he left his phone in his golf bag. So he couldn't get a hold of me when I asked him to come on yesterday. And then I said, okay, we'll come on today. And that was in the morning. Lo and behold, boom, the Qualcomm news comes out. So it's just funny how things work out that way. Not always work out that way. But S&P futures going to close the show 29.2050. That is a area of importance. Tuesday's Globex high, 29.21 That's been the high of the rebound. Dennis wants to take it out so it can go to 29.3575, and then the all-time high based on the front month is 29.5475. I know you got me on that one.
I don't have it yet. I have till June though, so I have another 2 months for us to get up another $2. I'm getting.
You know what? It's. I may lose a lunch, but it's great for my long-term portfolio. So let's there we go. I could do a little arbitrage. All right, Spencer, 902. We kept you overtime again here. I hope you don't charge Jason too much.
Nope.
But why don't you wrap things up?
Well, if you want to see PreMarket Prep live, hang out with Dennis, Joel, and myself, you can do so at the Benzinga Trading Summit, June 20th in New York City. Go to benzingatradingsummit.com to learn more there. And for PreMarket Prep listeners, if you enter the promo code PMP15, you'll get 15% off any ticket, including access to the trading lounge. So again, that's benzingatradingsummit.com, promo code PMP15 for that discount there. Thanks to all of you in both our chat rooms today, both on YouTube and premarket.benzinga.com. Thanks to our guest, Sean Udall. Please remember all the information from our show is for informational purposes only and not meant to be investing advice. Hope you all have a good rest of your day. We'll be back with you tomorrow for our final show of the week. Have a good one.